Let me teach you a trading strategy that I personally use, and it's made me hundreds of thousands of dollars. And the best part is that it's incredibly simple to understand. Most recently, I used it to make $50,000. I turned $16,000 into $66,000. That is an amazing 300% return. I like to normalize it with percentages because obviously we're all trading with different account sizes. So regardless, if you understand this strategy, you could have easily 3x'd whatever your base bet was. But very quickly, before we get into the details of what the trading strategy is and what it isn't, if you enjoy these type of strategy breakdowns and you want more of them, let me know in a comment below because I really do enjoy making them. With that being said, let's rock. Alrighty, enough with beating around the bush. I know that there's a lot of talking heads on the internet and it's driving us all crazy, so let me prove it to you. As you can see here, on May 8th, I put just over $16,000 into Tesla call options. And then on the 12th, the 13th, and the 14th, I scaled out of it. I sold 7, I sold 6, I sold 7. The first sale, I decided to scale out. That was a nice return of about 205%. The next one was around 338, and the final one was just below 400%. So by the time you put all that math together, 16,000 turned into 66, which was a gain of just over 300%, or if you ask my bank account, about $50,000. So now that you know this was a real trade, as in not paper trading, not Monday morning quarterbacking, or just making anything up, let me explain to you what I saw in the market, and I'm talking about the equities market and the options market, that made me get in on the 8th and then scale out on the 12th, 13th, and 14th to secure that bag. Well, step number one was to realize it didn't really start on May 8th. Here's a look at Tesla's daily chart, and this first came to my attention actually when we broke the high on Monday, April 28th. So this came on my radar many days in advance, and the reason I was looking at it was because we made a fresh local high. Obviously, we had this high here on Thursday, March 27th, and then fast forwarding to Monday, April 28th, we made a fresh high. So that tells me, okay, maybe the bulls are gaining control, and at minimum, maybe the bears are losing control. So the first question is, why not go long there? It's a fresh high, and the answer to that is pretty simple. It might be a fake out breakout. And in the case that it is a fake out breakout, congratulations, you just lost a lot of money because you top ticked it. I hate trading breakouts because by definition, you are taking on the most risk. You are the farthest away from the recent support that you could possibly be. So for me, I use it more as a flag of, okay, we made a fresh high or potentially a fresh low depending on what's going on in the markets. But in this case, we made a fresh high. I want to see how things calm down. And in reality, on this particular trade, it didn't take long to calm down because 2 days later, we were back at this EMA cloud. And this is really the second major thing I look at. So to quickly review and better explain this, the first thing I look for is market structure. That is the highs compared to the highs and the lows compared to the lows. Things by definition are bullish with higher highs and higher lows. And by definition, they are bearish with lower highs and lower lows. So check mark number one. When we got this breakout on Monday, April 28th, it let me think, okay, this is a fresh high. I want to see where the next low is. So I'm in this pause pattern, and the next low came on Wednesday the 30th, or you could even argue Thursday the 1st of May, because this is a higher low compared to the last one. So the market structure, higher highs and higher lows are compared. That's the first thing I care about. The second thing is going to be momentum. And that's basically, are you above or below EMAs? And that's exactly what this amazing EMA tool is for. We're below, below, below. We are testing, we pop up above. So now we are on the north side, the bullish side of momentum. So that's checkbox number 2. Price structure, bullish. Price momentum, bullish. And now we need to look at what's going on in the options world. And also, even if that all aligns, you have to look for a good risk to reward opportunity. And now that brings us to probably the most patient, the most disciplined part of this particular trade. The question here is, why not go long on Friday, May the 2nd? We're seeing a breakout. We're seeing the higher highs. We're seeing the higher lows. We're seeing the push on top. The issue here was in real time, we weren't seeing that many aggressive bets in the options market. I want to be going with those big players where they're buying calls, selling puts, and the delta's ripping. And for whatever reason, even though price looked good, we weren't really seeing that follow through in options. So it told me that maybe I just needed to hold on my horses a little bit. And that's exactly what I did. And I got lucky because on Monday, we were starting to break down a little bit. And then on Tuesday, a little bit more. And I noticed that we might be setting up for that classic double bottom. And then basically everything changed. Wednesday, a little bit of a nothing day. We are holding that low though. We did not make a fresh low, and that is key. We did not break down below the cloud. That is key. And then fast forward to Thursday, May the 8th, where not only were we bouncing out of the double bottom, but we saw something very interesting in the options market. Very quickly, a special shout out to Spot Gamma, which is the data analytics tool that I use. But you can see here, I rewound to May the 8th, and you can see a bunch of bets were coming in for 300. That made me think, okay, we might have about $20 of upside, and we'll reevaluate when we get there. And that's exactly when I decided to strike. Not only were we bouncing out of this low, but I had a target of 300, which would have been a slight breakout. So the options market was finally getting strong. So options sentiment improving, the technical structure was bullish, and price momentum was bullish. Check mark, check mark, check mark. The three things I care about were all looking in one way, and that's exactly when I decided to fire. As you can tell, this trading strategy is honestly pretty simple. You look for price structure, price momentum, and options flow to all agree, and then if you can take advantage of a low risk, high reward situation, you are looking good. My risk was this recent low. I knew my first stop was 300, and I was just going to reevaluate how the options market looked at that exact moment in time. And fortunately for me, I really didn't need that much patience because we were testing that key level the very next day. Now, as a quick reminder, this is what the gamma map looked like on the 8th. On Thursday, we had a little bit of a bump, and then it dropped all the way into negative gamma with this huge gamma node. The next day, it completely changed, and it's because of how aggressive the option traders were on the bullish side. A giant spike all the way up to 330, kind of dwarfing this node at 300, and that made me think if we could get on the other side of it, well, we just have an easy push all the way up to 330. It was a massive shift in options. I'm not gonna lie. At this point, I was feeling pretty good, but I was still a little bit nervous about the weekend. We took out 300, we couldn't close over it. It was a technical breakout, but I realized, once again, according to the options market, I really had no reason to get out because the gamma structure completely changed and my eyes were on 330. And in case you're already forgetting, we gapped up on Monday and went all the way to 320. And it was at this point that I decided it was appropriate to scale out of my position about by a third. There was two reasons I decided to scale out there. First of all, if you look at what was going on at 320, that ended up on, once again, the 12th. We're fast forwarding time a little bit. That was the peak of this gamma node. So just in case the ball rolled the other way, I wanted to lock in some. And I should also note, as you could see here, when I scaled out of this sort of a position, it was the base cost of this entire play, as in I was taking all risk off the table. No matter what I made on the other 13 of my 20 contracts, it was pure profit. And as you talk to any good trader, you know the major thing to do is risk management. But I should also note, I was just looking at this structure, and really, in my eyes, I was still majorly focusing on 330. In all reality, if I was a little bit more of a degen, if I was trusting my gut a little bit more, I could have waited to the very next day where we exploded above 330, and guess what? The options market was still pretty strong. Not only did we have that node at 330, something fair to consider, but the peak of the gamma node really went higher around 335. And when I realized that we were in between that, that's exactly where I decided to lock in the second portion of my trade, scaling out, and this time I did 6 out of 20. And last but not least, that brings us to the final portion of the play, which brings us to Wednesday, May the 14th, where we tapped 350, and it's also where I got out of the final 7 contracts of my 20 position play. And the reason I did that was in real time, and I was streaming this. So many people were playing 350, and my big concern there was, when those people go from out of the money to in the money and the delta basically goes to 50-50, they might choose to realize their profits, and then all of a sudden the market turns back around. So that's exactly the moment I decided to get my money. As soon as we hit 350, I locked in the final 1/3 of my position, and honestly pretty happy about it because not only was that basically a top tick, but a couple days after we just went back into a mode of consolidation. And that was the entire play. Like I promised you at the beginning of this video, honestly not that complicated. First thing I look for is price structure, as in either fresh highs or fresh lows. And really I look for the alignment of higher highs and higher lows in this case, but of course, if you're bearish, you could look for lower highs and lower lows. From there, I look for momentum. Are we on top of the EMAs and use whatever favorite EMAs you like, or are we on the bottom? I want those two things to align. And then from there, the final thing I'm going to check is options. Are the options market saying, hey, we are constructive and supportive and looking for a pop, or are we not so much? In this particular situation, we had the first to align. There was a fresh high, a little bit of a pullback, and we started to go again on top of bullish momentum. The reason I didn't take that first one was because the options market was basically saying, man, we're still a little bit neutral. Then when you fast forward a couple days, the options market was finally saying, yes, we are bullish. And I saw the big bets go from 300 all the way up to 330, so I decided to play it. And when we broke 300, tracking up to 320, I figured let's be a little safe here. We blew through that, and then I just kept scaling out at reasonable levels where there was a decent chance of a reversal. So at first I was safe, taking all my risk off the table, and then the other one was like key level, let's take it off. And the final one was basically a runner where it went far beyond I really could imagine. And then guess what? Where I could imagine, it was really just another major open interest level. So once again, this trading strategy is looking at structure, momentum, and then the key open interest levels, and then obviously the impacts on your favorite Greeks such as delta and gamma. The way I choose to monitor what's going on in the options market, I use spot gamma. I've used them all. I think that this is second to none, but obviously that's a personal preference. Highly recommend you use whatever options analytics tool you find to be the most useful. And that's it, folks. That's how I turned $16,000 into 66, netting $50,000, better known as a 300% ROI. Now, obviously, if you have any questions, let me know in a comment below. But more importantly, if you want to trade this strategy with me and an entire community of like-minded systematic traders, that's exactly what the Goonie Trading Discord is for. It's in the description below. And the best part is the entire first month is free, so you can see this type of stuff play out in real time. I highly recommend you check it out. Now, obviously, if you made it to this point in the video, I appreciate all the good vibes. Thank you, thank you, thank you. I'll catch you in the next one. Peace.